Hello traders, Samurai Trader here. Welcome to session 123. If you watched the first minute or so, just as I was about to do a recap on my live session, which I'll show you a video, I also fired off a trade at the open of the Globex session. Now there's always an issue early in the Globex session, that is with volume. If you're trading 1 to 5 contracts, no problem, but when you start trading 8 to 10, you can get slippage, but that's another story for another time. So how to day trade any market, the $1,000 a day challenge. So what I'm about to show you, you can apply to any market, whether you trade futures, forex, or stocks. $1,000 a day not enough, just simply trade more contracts. As always, I do need to pull up the disclaimer. I quickly pulled it up when I had that live trade on, just to make sure that you know there is a risk in trading. Don't trade with money that you can't afford to lose. And just a very quick advertisement, if you haven't already downloaded my ebook for Truth About Day Trading, please see the description link below. You'll be able to download that. Make sure you subscribe to my channel to be kept up to date with any of my new videos, and better still, why don't you become a member? So once again, I'll be quick with this. For $197 you get all of my setups. If you've got NinjaTrader, TradeStation, number of other platforms, I've got just about all, if most of that is just about all I do have. Let me say that again. I've got all of my indicators for TradeStation and NinjaTrader 8. I've customized a number of others for these other platforms, but either way I use common indicators just with my custom settings, so you can basically use just about any trading platform, because I do give you instructions and videos on how to set up my indicators on just about any platform. Now also, and that's all for $197, including the indicators, and you've got lifetime access. As well as that, you get to attend 8 of my live coaching sessions. Now they are recorded, doesn't matter where you are in the world, so if you can't make it, they are 6 p.m. to 8 p.m. so as a bonus you get 1 month's access. So also we're just going down the road of a lot of our traders, I was unaware, are with various prop firms. So we've also just launching a whole new area in our members area on prop trading. So I just thought I'd pull this up because this is important. So as you'll see that my members area is extremely comprehensive. But now, is it on page here? Maybe it's on page 3. But we're getting more and more articles on prop firm trading. In fact, we're probably going to start running some specialized classes for those. So once again, for members watching this, thank you for all of those that are sending in. Some of their members have sent in 3-4 page summaries, just absolutely fantastic. So if you're looking at trading for a prop firm or qualifying and then trading, my setups work beautifully, because one thing that's very important, of course, is risk management, which I'm very much about. So come and join us. The link is below. Let's now get into this. So I actually made an error when I play back the video. I actually had in there that we had 3 trades, but in fact here I'd fired off 4 trades, and I'll show you. We'll go through the 9-10 minute video. Now this is all in 30 minutes, but I pause it on the way through, so I'll cut it down. So this is a really good session. I'll explain the setups, but then at the end of the day, I don't normally do this, but I saw another great setup towards the end of a trading day, just after 3 p.m. Central Standard Time, so I decided to fire this off. Look, I was up over $400 on this trade, and I should have covered down here at the swing low. In fact, this trade I just fired off here at the start of this video that you just saw, just there, the same thing. Now here I got out just at the swing. So traders, you'll hear me talk about exiting or at least covering or maybe tightening a stop when you hit major swing lows. That makes a very big difference. Now for members watching this, you can see this is live, and we just had you just had two entries there, or potential entries there, T10 entries, which are very mechanical. But let's go back to this. Excuse me. So I'm going to just explain. So I didn't record that one, I don't think, but just to explain this, I made a new lower low, made a new lower high. That, as I mentioned, I let this go too long because we're already up 1981. So in the end, I really I wasn't even up an extra $100, but I was up $400 plus at this stage, but I gave it all back by not covering at that swing. And so that was a silly mistake. Now, still worked out to be profitable. I didn't lose any money. However, traders, you've got to be on the ball when you are trading. So as we get into this video, I'll be quick on some of these points here, but it's so critical, traders, that you do have targets. I've got a sensible target. I only target $200 per contract per car per day. And why? Because it's so achievable with how I trade, as you're about to see in a moment. Now, a lot of traders will call the number, or would-be traders will have targets and $500 to $1,000. Is that a cheap per contract traded? Is that achievable? Yes, it is. However, so few traders actually make it. So by setting sensible targets, particularly if you're a new trader, you can kick off with a lower target and you build, because you're building both confidence and competence. Now in this case, actually I'm not on the NQ in this case today. I'm actually trading the RTY. So if I'm on actually the 4-tick RTY or the NQ or even the YM, okay, my target is $200 a day per contract, and the reason being I'm after 2.5% return. Now what I mean by that is I'm very conservative, so I allow $8,000 per contract that I trade with a 1% risk. Okay, and so my return then is I'm after that. Now you can, as you're about to see, trade this market sensibly at a 2% risk with only 4,000. If you don't have that, you start on the micro, but this is really important. Please don't skip past this, because this is why so many traders fail when they're trying to qualify with prop firms, or they keep blowing their accounts. Greed is not good. Greed is bad. So if you're scalping or day trading the RTY, the YM, you can do the same on the 6A. And the reason I mention these markets is they're all $5 a tick. Now you apply the same principle to any market, it doesn't matter. Okay, so here if you're targeting for 200 a day, that's fantastic. As you're about to see, you make a lot of money doing that. Now the next question is, once you get motivated, how do we get there? You usually see I'll achieve my targets usually within between 3 and 5 trades. Depends whether I've had a loss or not, and I'll show you what I mean by steps in a moment. Now how do you achieve $200 a day plus consistently? You only need 4 scalps a day. Now when I say scalps, they usually go over a number of minutes. They're sort of usually over 10-15 minutes, and you'll see what I mean when I show you in a moment with the live recording. Okay, this ain't rocket science. It's not. It's about consistency, discipline, and patience. Now I've already mentioned the $4,000 account. What if you don't have $4,000? Well, if you don't have 4,000, don't try to do it on the 4-tick. Start on the micro. Traders, you break the rules, the trading gods will come down and drain your accounts. It's true. Okay, so you really want to do this correctly. This is a profession. Okay, so if you go for if you're just trading a micro, you're within exactly the same. A micro contract is 10% of the value of a big contract if you're a new trader, just so you know. Okay, and you're after $20, so you're after $10. Sorry, you're after 10% of the value of a big contract. So here by week 12 you now have built your account up to 4,600. And how this compound table works is we only start out in a contract each time we double our money, so it's been very sensible. We're using the market's money, no ridiculous compounding tables. You've got to double your money to start trading another contract. This is about staying in the business long term. Now once you've done that, okay, so you can see here 200 a day, sorry, 20 a day, Freudian slip there. Then we jump over to the 4-tick Renko, whether it be the YM, the NQ. Just when I mention the NQ, the 4-tick is about the smallest time frame you can trade. And of course this is during the NQ. If you were to trade a 4-tick, it'd have to be after hours during a Globex session. The 4-tick YM or RTY you can trade easily during the most of the time during the New York session. But I just want to make that quite clear that on the NQ during the New York session you're going to be trading a 16-tick, a much higher time frame. Okay, we call it the nifty NAS and the nasty NAS. It's got two names because it can bite you, but the bottom line here is based upon, and I'll show you how we're going to do this in a minute, based on 200 a day. Once again, only starting to trade a second contract each time you double your money. Within 12 weeks you got the potential there of earning 10,000 a week, and you've got an income, sorry, I should say a capital base of 46,000. Now of course you can start with a prop firm, and where I'm really becoming interested in prop firm trading for my members is you don't have to have, of course you can have just a few $100s to get going, and you got the same potential here, and you're trading someone else's money. Now there's another thing it can give you. Even if you've got your own funds, it can also make sure that you work within their risk parameters, which are very strict. So there's some major benefits there. So anyway, here within 12 weeks we're up there. So if we look at the bottom line here, starting off with the micro, now even if you've got 4,000, 10,000, 20,000, and just to make sure I clearly explain this, you're never risking more than 2%. I work at a 1% risk parameter, but as you grow your account, as you perhaps get older, I'm in my 60s, we want to be perhaps more conservative, and it just makes trading easier. So this is on a sensible, still a sensible rate of 2% risk maximum per trade. Now here within 24 weeks you've got the potential then of a $10,000 a week income, or whatever income you may have. Now we're now going to switch over to the recording I've got just here. Now with that being said, there's some important things that you'll see me because I'll give you a running commentary. I don't record the issue. I'll put the recording on, but I don't have a soundtrack usually when I'm recording. I don't have to worry about talking and trading. So but these are the important areas that I'll explain. Where are our pivot levels, open, high, low and close, and major EMAs, and our intraday excuse me, intraday swing highs and lows, very important, as we just saw by the way, and our current day's high and low. So now there we just had a T3. Now this is live. Now let me just, and this is going to be very important. Now a T3, and you had one, now that was, yep, you had one there as well. A T3, you're going to see me have a T3 in the recording I'm about to show you. Okay, they're a great trade. They're a reversal. They're what I call a reversion to the mean. So anyway, let me pause this and pull up this live recording. Okay, so we are, this is a live record. I'll give you a commentary. Now what you can see up here at traders, these are major EMAs you can see at the top of your screen just there. Got to be very careful when you're trading around major EMAs. Now I've gone long, and this is what we call, just looking down, it's what I call a T10. I will usually go for a fixed target. Good, I type that in, and just above, notice that there we've got a pivot. Now there are two types of pivots I use both standard traditional pivots and I use Camarilla pivots, and so I'm targeting that pivot because they become what we call price magnets. Okay, now here I'm trading 8 contracts. This is during the New York afternoon session at 1:26 p.m. Central Standard Time. Okay, so I type that in. Okay, so now we've hit the target, so we've got great volume, we're pushing through, we've now got a pivot. Now I can also see I've got a lot of what I call angulation. Now I'm not sure on screen if you can see if the points are here when I put that up. This is called angulation. When I've got a lot of angulation setting up, I'm usually getting very close to getting what I call a T3. Now a T3 setup, I don't need any divergence. It's very set. It's something after I've been day trading now for 28 years, and it's a very mechanical rule that I have. Strict set of rules, but very easy to identify. And so if I remember correctly, I get a T3, and I'm just looking at the NQ right now. I won't pull it down, it might upset this recording. So on the NQ, as I'm recording this, we just had a big T3 as well, so it's a very high probability trade. So here I've got there, yep, it's going to be a T3, so question mark, I'm not sure. So there, using a dome, I've placed my order, I'm adjusting my stop. I like to have my stop loss one tick above usually the swing point, just depending on a couple of things here. Now also sometimes you'll see me move my stop around as far as I'll pull it down, but I never move my stop out further. I've got a very mechanical way of where I enter, so I've got rules-based trading on when to enter the trade and where to take profits. However, I will extend my target if I'm buying or selling into a pivot or a major area of support or resistance. I will go for a larger profit target. Now I do have to get through a pivot just here, so as you can see there's a pivot just below. Now that can at times cause some issues, but if I remember correctly, we had no problems getting through it. Now if anything too, I could have increased my target. I want you to notice where my buy limit is there. See the cyan line down there? I really should have perhaps increased my target, that is go to break even, and this way you'll quite often see me pick up some much larger moves. Okay, woulda, coulda, shoulda, that's always a thing. However, remember, I only need and I call these steps, by the way, I didn't point this out. So where we're looking at and of course these are Renko charts, you can apply this to any sort of chart that you trade. Renko, time-based, range, I love Renko, and tick charts. So both Renko and tick I trade, and I call each one of these little bricks here and each one a step down. Now each step here is worth $10. Now to net $200 per contract. After any losses and commissions, you only need 20 net steps a day. So I love just having a target. I try not to think so much about the money, but think about the steps that I'm achieving. Now just here, this is going to be what we call a 3B members. So I've entered this as a 3B. I need to adjust the stop there slightly. You can see up there, I'm right up there. It is a pivot up above. Okay, we are recording a bit of a delay here at times, but up here, so we're targeting the pivot. Now this is where, when you're targeting a pivot, quite often I'll pull my stop down. I just can't remember what happens here, but I'll pull my stop down and front run the pivot. Now what I mean by front run, that is exit before we actually hit the pivot. I might even move this along wee bit, because if I remember correctly we fluffed around here for a little while. Okay, so you can see there, a moment ago where I was saying that you've got to have $4,000 per contract you trade. Reason for that is if you've got a 16 tick stop, that is $80. That's 2% of 4,000 is $80. So I've got a maximum stop there of 16 ticks. The smaller the stop the better, of course, but you don't want to have it too tight because you'll get whipsawed. Just being very shy on these flat major EMAs. Traders, remember, it's not the quantity of trades that you're after the quality. Okay, so sometimes I'll sit out a zone just waiting for that trend, and as you can see, that T3, we just had one as I showed you live on the once just set up on the 3-2. By the way, this is a 4-2 Renko. After hours I like to trade a 2-1 or a 3-2, a lower time frame, because you don't have the volatility. And just to move this along, because I remember this fluffed around for some time, and I ended up getting out there at break even, a little bit of a profit there, but exiting out of this trade. And the reason being, we're just going sideways. See how the EMAs are sideways there, so that is a danger zone. Okay, so I really like to see higher highs and higher lows. If you look at that point there to there, okay, some other good reasons for taking that trade. You'll see me sometimes apply fib levels, but I do that more out of interest. Okay, so just move this along a little bit further. Okay, so we pull back, so that's a 50% bit after a 50% retracement, but I don't want to short here, traders. And the reason, even though you've got a sort of a fib pullback, look how flat your EMAs are. Be very cautious of flat EMAs. Now even here, so for members watching this, I know it's a bet the farm, but I decided not to take that. You can see the divergence we got down the bottom, and thankfully I think if I'd have taken that bet the farm, I would have been stopped by one tick just there as well. I'm just waiting for a break out of this whole area. Now here I'm looking at the anchor chart 1, by the way, just checking out our major EMAs there on the anchor chart. So here I'm still not in another trade. I've only got another minute to go on this video, and I want to show you another one because I actually hit the stop button accidentally, which then winds the whole video up. So I went back in and re-recorded this, so not re-recorded the whole thing, but you'll see what I mean in a moment. Okay, so let's just move this along here at pivot. So I'll wait. That is, I actually had a potential entry there. We don't want to buy hard up against the pivot. It's like, buying at the brick wall. I want to wait for a retracement. Now I've got a new higher high just here. So now I'm cooking with gas. I'm looking for another trade entry, and I've got one here. Now even if I take this trade just here, we still have to, now I'm in this trade, we still have to get through the pivot. So it's not a flawless, or it's not a 90-10 trade, it's more of a 75 type trade. And you can see here I'm actually feeling a wee bit nervous just watching this trade, because I am at the pivot. So hence I've brought my stop loss up very quickly, just in case I get a pivot bounce. And you can see here I'm thinking, okay, let's lock some profit in to this trade. Okay, let's just be wary. Okay, then we got filled. Thank you very much. We're out of this trade. Now let me now pull up the next one. Okay, I think here I was just doing a quick summary. Now it was actually 4 trades, not 3, by the way. I have to excuse my arithmetic there. I had one over here, one there, we had one there, and one here, and I ended up as I mentioned, taking another trade, which I'll show you in a moment. So it was less than 30 minutes of trading. Now what I'm looking for, I'm really looking at trading with the trend generally. I'm very good at divergence. I love divergence trades, and I love the T3s, which is really a reversal trade. But if you're a new trader, I really recommend that you stand aside and do not trade divergence early in your career. Now this is a very high probability for members watching. It's a T20-1, so as we know, they're breaking out of a range, breakout pullback, very high probability. And I've already mentioned this other trade here, which I then took, which was really, I should have covered at the swing low. I was, quite frankly, I was being greedy. Okay, so still a good session. They say you should not trade Friday afternoons, but you know what, there can be some great trends set up in the afternoon sessions. Now just to point this out as I'm about to close here, so this is live here. This is the T3 I mentioned. Okay, we then pull back. Now what about buying here? Well, what you can see that thin black line, that is a major EMA off my anchor chart 1. So I trade with 2 anchor charts. The anchor chart 2 I refer to occasionally. Now look at that right there. That was a 70.7% pullback right there. Now so Larry Pesavento is a guru of Fibonacci numbers and trade patterns and square root numbers. That's one of his favorite levels, but I wouldn't have bought here, and the reason being, we have major EMAs straight above. In fact, we have a specific trade name for this. We call this a T12, and the reason this is such a good probability trade, look at your anchor chart. Now remember, we're live, so I couldn't manipulate this at all. So here, see how we're bouncing here on my anchor chart. Okay, so by what we want to be doing is trading really in the direction of a higher time frame. We don't want to be trading what I call 60-40 setups. We want to be trading really 80-20s or above. Now here, remember that swing low I said that I gave that $400 back on the recording I just showed you? Now sometimes you'll punch straight through. However, remember, you only need 4 6-step scalps a day to become very wealthy in this business. 1 2 3 4 5 6 7 8, you know, here with your T10 members watching this. Now what about this T10, because I just told you I wouldn't buy here. Okay, if we'd have taken this T10, as soon as we hit our major EMAs, you would lift your stop loss up to your entry price and lock a couple of ticks in. Now each one of these steps here is worth 2 ticks, by the way. Is a 2-tick move, or $10. So yes, we could have taken this, but I want you to notice the distance is narrowing. You've got a greater distance here compared to here, so you're getting a squeeze in, and that's where usually we'll then get a bounce. Now you would have now just wrapped up your trading for the day, because you had and just to point this out, when the market first opens, I don't take a trade for the first 5 minutes. And so you get home from work, the Globex session is open at 1700 Central Standard Time. There's some damn good trading after hours. So if you've got a job, you had a nice little T3 potential there. I wasn't in that one, obviously. You had one here. They had an entry there, which I got into. You had one there, had a T10. Now these are mechanical rules-based trades. You had, now can I just confirm something just there? Yes. Oh, hang on a sec. Yes, I just had to do a quick count. That was a T3 just there, and your T12's very mechanical. Now look at your anchor chart. See that there? See your black dots? Okay, so they're what I call rule of 1 entries. Okay, so traders, I've covered a lot in this session. You can do this. You can master the art of day trading. Okay, now here my target, by the way, today is $2,000. So just in that one trade I'm up 82 sorry, yeah, 82 per contract. Now with that being said, you could be going for, and here I would have been finished, so I would have easily hit my target. You might go for 400 a contract, whatever. But as I mentioned, I love POQ, the power of quitting. Get in, get out, get paid, go live your life. Now just down here, now I'd move this target down here. So potentially we love to target prior swing lows. Now if I'd have taken this short, I'm not so worried about this one, this swing. I'm looking, where's your last major swing? And the other thing we want to check out regularly, where are our pivots? Okay, so here's the current day's high, yesterday's high. These are all important support resistance levels, and fortunately now we have indicators that plot all of those automatically, so it makes trading so much easier. Traders, why don't you come and join me as a member? Okay, for $197 you get, there's literally dozens, there's actually hundreds of videos in the members area. No, you don't have to watch them all. In fact, you start off trading just one or two of my core setups. You start with that, and that's all you need, and you may choose just to trade those the rest of your life. Now I actually put this up because I wasn't sure if that would have delivered just before I started recording, as I mentioned, but we could see that trade, and I was targeting the swing low, but I was front running that swing low by 2 ticks. Anyway, traders, become a member. You can join using the link below. And traders, as always, I love day trading, and of course you get 8 sessions. Now after these 8 sessions, by the way, you can drop me an email and you can continue to attend for $97 a month. It's not an automatic sign up, you've got to email me after that, but I do give you a month free in those sessions. Right, traders, thank you. See you in the next video.